Hey everyone, welcome back. Today's topic is a game changer for your wallet, especially if you're a saver, borrower, or retiree. The Federal Reserve just dropped a major hint about cutting interest rates soon, and President Trump is pushing hard for even bigger cuts. But here's the twist. There's a hidden risk most people aren't talking about. One that could impact your savings, loans, and even retirement security. Stick around because by the end of this, you'll know exactly what's coming and the smart moves to make next. Before we dive in, tell me in the comments, how do interest rates affect you? Are you struggling with high borrowing costs, or are you worried about your savings losing value? Let's discuss. And if you find this helpful, hit subscribe. It keeps this community strong. Right now the Fed, which controls borrowing costs in America, is playing it safe. They skipped a rate cut last month but hinted at a small cut, maybe 0.5% later this year. But President Trump, he's furious. He's publicly pressuring Fed Chair Jerome Powell, demanding deep, fast rate cuts. Why? Cheaper debt? Lower rates equal sign the government pays less interest on the $36 trillion national debt. Economic boost? Trump believes it'll help factories, jobs, and his re-election chances. The Fed's big fear? Cutting rates too much could trigger 1,970 S-style inflation, especially since Trump's tariffs are raising prices on imports. Worker shortages due to tighter immigration rules are pushing wages and prices higher. For borrowers, good news. Credit cards and loans, slightly lower interest rates. Mortgages, refinancing, possible small drops. But watch bond yields, they don't always follow the Fed. Car loans and small business loans, a bit more affordable. For savers and retirees, bad news. High-yield savings and CDs. Those sweet 5% returns, they'll shrink. Fixed-income seniors, losing even $1,000 year in interest hurts when groceries and meds keep getting pricier. The debt wild card. Trump's right. Lower rates save the US billions in interest. But if investors panic over rising debt, long-term rates, like mortgages, might not fall much. If you're a saver, lock in high-rate CDs before cuts hit. Ask your bank about laddering CDs or low-risk bonds. If you're a borrower, refinance soon, lenders adjust fast. Watch bond yields, not just Fed headlines. If you're retired, diversify income, dividend stocks, annuities. Check if Social Security's cost of living adjustment will keep up with inflation. The inflation threat, don't ignore this. Tariffs plus Middle East tensions equal sign higher oil prices, everything gets more expensive. Fewer immigrant workers equal sign higher food costs, yes, even your grocery bill. The Fed's walking a tightrope, cut too much, and inflation could force them to hike rates again later, wreaking havoc on markets. Bottom line, the Fed and Trump are in a power struggle, but you feel the real impact in your savings, loans, and retirement. Stay calm, review your finances this week, and don't wait to act. What do you think? Should the Fed cut rates to help borrowers or hold steady for savers? Let's debate in the comments. If this helped, subscribe and hit the thumbs up. It means a lot. Share this with someone who needs a financial heads up, and I'll see you next time with more updates. Take care of your money, and yourselves.